trade wars are not easy to win. That's not a quote from an economist. It's the harsh reality playing out right now. While the US doubles down on tariffs and protectionist policies, its closest ally, Canada, is quietly reshaping the global trade game. And this time, America might be left behind. Welcome to Infinite Heights, where we break down the biggest stories in global trade and economics. Today, we're counting down 9 bold moves by Canada that are shaking up its relationship with the US, strengthening its global alliances, and redefining its role in the world economy. Stick around because by the end of this video, you'll understand why this could be one of America's worst nightmares and what it means for the future of global trade. Number 9. Canada's trade revolution. Breaking free from US dependence. For decades, Canada has relied heavily on the US economy. Nearly 75% of Canadian exports have traditionally gone south of the border. But that era is coming to an end. Canada is diversifying like never before. It's no longer content to be tied to one trading partner, especially one that keeps imposing tariffs and threatening economic penalties. The numbers are clear. By 2030, Canada aims to reduce its reliance on US markets from 75% to just 50%. In 2024 alone, trade with non-US partners grew by an impressive 18%. This isn't just about protecting its economy, it's about building resilience in an unpredictable world. Canada's strategy involves targeting key growth markets in Asia, Europe, and emerging economies. They're not just looking for new customers, they're building long-term partnerships that could reshape global supply chains. For businesses and investors, this means new opportunities are opening up. Canadian companies are expanding their reach, and foreign investors are taking notice. Keep an eye on sectors like technology, renewable energy, and advanced manufacturing. These are likely to see significant growth as Canada diversifies its trade relationships. Number 8. The CETA advantage. Strengthening ties with Europe. Canada isn't just diversifying, it's building powerful new alliances. Enter CETA, the comprehensive economic and trade agreement with the European Union. Since CETA came into effect in 2017, trade between Canada and Europe has skyrocketed. In fact, trade hit a record $110 billion in 2024. Tariffs on 99% of goods traded between Canada and EU nations have been eliminated. But it doesn't stop there. Canada is doubling down on its relationship with Europe by focusing on critical industries like renewable energy and electric vehicles. This partnership isn't just about numbers, it's about securing a future in industries that will dominate the next decade. What does this mean for businesses? Unprecedented access to European markets. Canadian companies can now compete on a level playing field with EU firms, opening up new avenues for growth and expansion. For European businesses, it means easier access to Canadian resources and a potential gateway to North American markets. The CETA advantage extends beyond trade. It's fostering collaboration in research and development, particularly in fields like artificial intelligence, biotechnology, and clean energy. This could lead to groundbreaking innovations that benefit both sides of the Atlantic. Number 7. The energy pivot Asia rising. Here's a stat that might surprise you. For decades, 97% of Canada's oil exports went to the US. That's right, nearly all of it. But not anymore. With the completion of the Trans Mountain Pipeline expansion in 2024, Canada has unlocked new export opportunities in Asia. And they're wasting no time. China purchased $2 billion worth of Canadian crude oil in just 6 months. Japan and South Korea have signed long-term agreements for liquefied natural gas. By diversifying its energy exports, Canada is reducing its vulnerability to US policies while tapping into Asia's booming demand for energy. This shift has major implications for global energy markets. It could help stabilize oil prices by reducing dependence on Middle Eastern supplies. It positions Canada as a key player in Asia's energy security strategy. It opens up new investment opportunities in Canada's energy sector, particularly in LNG infrastructure. For Canadian energy companies, this means access to new markets and potentially higher profits. For Asian countries, it means a stable, reliable source of energy from a politically stable nation. And for the US, it means increased competition and potentially reduced influence in global energy markets. Let's face it, the United States' grip on global trade is slipping, and Canada isn't alone in seeking alternatives. Here's what's happening. US protectionism is pushing allies like Canada and Europe to look elsewhere. Emerging markets like China and India are offering lucrative opportunities for trade diversification. America risks losing its influence over global supply chains, a development that could shrink market share for US businesses. This isn't just about trade, it's about power dynamics shifting away from Washington. We're seeing a multipolar world emerge, where no single country dominates global trade. This has profound implications. It could lead to more balanced global economic growth. It might reduce the impact of US economic sanctions on other countries. It could spur innovation as countries compete to attract trade partners. For businesses, this means adapting to a more complex global marketplace. It's no longer enough to focus on US markets. Companies need to think globally and be prepared to navigate multiple regulatory environments. While America debates climate policies, Canada is taking action. It's not just diversifying trade, it's doing so sustainably. Key initiatives include expanding mining projects for critical minerals like nickel, lithium, and cobalt, essential for EV batteries. Investing heavily in renewable energy technologies like wind power and hydrogen fuel cells. Promoting sustainable forestry practices through partnerships with European nations. These aren't just good PR moves. They're strategic investments in industries that will define the future economy. Canada is positioning itself as a leader in the green economy, and it's paying off. Foreign investment in Canadian clean tech has doubled since 2020. Canadian renewable energy companies are expanding globally, particularly in Europe and Asia. The country is becoming a hub for sustainable innovation, attracting top talent from around the world. For investors, this means opportunities in sectors like clean energy, sustainable mining, and green technology. For businesses, it means adapting to stricter environmental standards, but also potential growth in new, sustainable markets. The EV industry is one of the fastest-growing sectors globally, and it's also becoming a key battleground between Canada and the United States. Here's why. Tesla and other US-based EV manufacturers rely heavily on Canadian imports of nickel, lithium, and aluminum, materials crucial for EV batteries. But as Canada imposes tariffs on these exports in response to US protectionism, production costs are rising fast. The result? Tesla stock prices are fluctuating wildly, EV prices are soaring, and consumers are feeling the pinch. This isn't just a challenge for Tesla, it's a wake-up call for the entire US auto industry. It highlights the vulnerabilities in global supply chains and the risks of over-reliance on a single supplier. What does this mean for the future of EVs? We might see more localized production of EV components. There could be increased investment in alternative battery technologies. Non-US EV manufacturers might gain a competitive edge in global markets. For consumers, this could mean higher prices in the short term, but potentially more choice and innovation in the long run. Canada isn't taking US tariffs lying down. It's hitting back where it hurts most. Strategic targets include Kentucky bourbon, Florida orange juice, and electric vehicles. These aren't random choices. They're calculated moves designed to maximize political pressure on Washington while sending a clear message. If you play hardball with us, we'll do the same. Each product taxed creates ripple effects throughout supply chains. Consumer costs rise. Regional economies dependent on these industries take a hit. Confidence in US-led trade policies continues to erode. This targeted approach shows that Canada is willing to use its economic leverage strategically. It's a risky move, but one that could pay off by forcing the US back to the negotiating table. For businesses caught in the crossfire, it means adapting quickly. Diversifying supply chains to reduce reliance on affected products. Exploring new markets to offset losses in traditional strongholds. Investing in innovation to stay competitive despite higher costs. So where does this leave us? Can America maintain its leadership in global trade, or will it face economic isolation as trust from its partners fades? The answer depends largely on whether Washington can adapt. 1. Rebuilding trust with allies through consistent policies. 2. Reducing reliance on tariffs as a primary tool of economic diplomacy. 3. Investing in industries critical for future growth, like renewable energy and advanced manufacturing. For now, one thing is clear. The world is changing, and fast. As nations like Canada take bold steps toward independence, America must decide whether it wants to lead or be left behind. What could a U.S. comeback look like? A renewed focus on multilateral trade agreements rather than bilateral deals. Increased investment in education and workforce development to stay competitive in high-tech industries. A more collaborative approach to global challenges like climate change and cybersecurity. The stakes are high, and the clock is ticking. The decisions made in the next few years could shape the global economic landscape for decades to come. Final thoughts: Canada isn't just diversifying. It's leading a quiet revolution that could reshape global trade as we know it. While Washington focuses inward, Ottawa is building bridges across oceans. And those bridges might just leave America stranded on an island of its own making. What do you think? Is this shift inevitable, or can America turn things around? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like this video and subscribe for more insights into how global economics shape our everyday lives. Thanks for tuning into Infinite Heights. We'll see you next time.